which means kung gitagaan kag range na grabe ka broad, like we say na ang range nga gihatag kay 20,000 to 2 million pesos. Di na reasonable. Di na reasonable because sobra na ka-broad or lawak ang range na like di na katuohan. So, if that's the case, na di na reasonable ang estimate, the amount of provision now will be equal to 0. Because always remember, in order for a liability to recognize number one, there must be a probable future economic benefits that will flow to the outside the entity. Second, dapat the amount of liability can be measured reliably. So if broad ra ang range, the amount of provision will equal to 0. So let's proceed to the second approach. The second approach is called expected value approach. So, pag moingon tag expected value approach, well, here the amount of provision is actually equal to the sum of all the possible amount multiplied to their corresponding probability, which means if daghang possible amount ang given sa problem, just multiply those possible amounts to their corresponding probability and then kuhaon ang sum sa ilang mga product, and then that's it already, the amount of provisions. So let's see the illustration of expected value method. In illustration number 1, expected value method, an entity sells goods with a warranty under which customers are covered for the cost of repairs of any manufacturing defects that become apparent within 6 months after purchase. If minor defects are detected in all products sold, repair costs would be about 1 million. So, if minor defect siya, ang repair cost niya is 1 million. If major defects are detected in all products sold, repair costs would be about 5 million. So, kung sa minor defects, ang repair cost is 1 million, sa major defects kay 5 million. The entity, past experience, and future expectation indicate that 75% of the goods sold will have no defects. 20% will have minor defects and 5% will have major defects. So, ang 75% sa 100% nga product nga sold is no defect siya. So, safe ra to siya. Ang 20% has minor defects o 5% naman kay major defects. The expected value or cost of repairs is measured as follows. So, 75% sales, none siya, kay wala man siya defects, so safe na siya. 20% would be multiplied to the repair cost of minor defects, which is 1 million, and in 5% also multiplied to the major defect repair cost of major defect, which is 5 million. So 20% times 1 million would be 200,000 rather, and 5% times 5 million would be 250,000. So we will add the 200 and 250,000 would be the total of 450,000, and that was the total expected value or cost of repairs. So let's have another illustration. In illustration number 2, an entity is a defendant in a patent infringement suit. So nilabag siya sa agreement. The lawyers believe that there is a 60% chance that the court will not dismiss the case. So 60% ang chance nga mapildi ang entity. And the entity will incur an outflow of future economic benefits. So, naagyod bayran. If the court rules against the entity and in favor of the claimant, the lawyers believe that there is a 30% chance that entity will be required to pay damages of 4 million and a 70% chance that the damages will be 2 million rather. So, na 30% nga chance na ang entity mo bayad og damages of 4 million and 70% naman nga mobayad siya og damages nga 2 million. A 10% risk adjustment factors to the probability of the expected cash flows is considered appropriate to reflect the uncertainties in the cash flow estimate. So, measurement of provision. Weighted probabilities. So, 30% is the gikan ni siya sa chances of entity nga mobayad og 4 million rather times ang 60% na chance nga not dismissed ang case. So,